Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's Landon Swan, the co-founder of LikeFolio. Landon, welcome to the show.
Thanks, Tom. Good to be here.
All right, so we're talking Best Buy. Stocks had a pretty good run so far here in 2022, as the stock's relatively flat, but it did pull back from all-time highs recently, nearly 30%. You know what, Landon, I look at this company as all their competitors are gone. The Circuit Cities of the world, their biggest competitor now is probably maybe Amazon. You're ordering electronics from them. Are you seeing any positive data on this company going into earnings? Because every time I think, who goes to Best Buy anymore, they do well on earnings, or they beat expectations that I might see in the company.
Yeah, I tell you what, I'm one of those people. I actually go to Best Buy sometimes when I need something. Not as much anymore because you don't know if they're going to have it. They do have some out-of-stock issues. Actually, mentions of that are up 45% versus pre-COVID time. So there's a lot of frustration, I think, with consumers not being able to get what they want. But that's kind of widespread. Obviously, that's not just Best Buy, but they are definitely feeling the pain from that. When you look at how well they're doing with our data, it's tough to compare them, right? We don't have any data on Circuit City. They're gone. But we've got Amazon, Walmart, Target. You could even make an argument for some Costco comparisons there. They sell TVs. But among those, if you include Best Buy in that group, they've actually got, Best Buy has the weakest purchase intent over the last quarter or so. So I'm not real positive on that angle. And then if you look at happiness, they're actually only beating Walmart in that group. So they're behind Target, they're behind Amazon, they're behind Costco, and actually pretty significantly behind. So long term, I don't like what's going on with Best Buy when it comes to happiness. A little concerned this quarter on purchase intent. And actually, if you look at, one of the things that we like to look at is how they've done on the omni-channel fulfillment. So last quarter, they reported that their digital sales were twice what they were in 2019. When you're comparing them back to a couple of years ago, we've got a small bump here, about 5% over what it was in 2020, which was obviously a big year at this time. But I think what's happening is a lot of people are getting more used to going online. We're seeing foot traffic numbers for Best Buy decrease. We're seeing the dimensions of using the app increase, or not the app, the website increase. And I think one of the concerns is that maybe there was a lot of sort of pull forward demand on electronics, because you got people who were stuck at home, working from home for the first time. They had to buy new setups, or they had to buy their kids laptops or iPads, or maybe they just wanted more entertainment if they were stuck inside over the last year and a half or so. And so they bought all those things, and now they don't really need them anymore. In fact, if you look at the electronics demand at Best Buy, people talking specifically at buying electronics at Best Buy, there's a significant decrease, about 13%, when you compare it back to 2019. So you take out the 2020 huge ramp up and go back to what was sort of normal, and we're 13% lower when we're talking about LikeFolio data, people saying I'm going to Best Buy, or I just bought something at Best Buy in the electronics category. So we group a lot of different products together. We have a lot of different ways of slicing and dicing the data. This is an important one. So I think, like I said, there's a lot of pull forward demand. And now they even mentioned it, in fact, in their last quarterly report, that they're seeing that consumers are spending more on travel and entertainment, because that's where the pent-up demand is. That's what people missed out on over the last couple of years. We've all had plenty of screen time and ability to do electronic stuff over the last couple of years at home, working from home, whatever it may be. So you check that box, and now you're ready to get out and actually live real life, and that does not involve going to Best Buy. So a little concerned there with that. All that being said, our score is actually only -6 on this company about to report. So we're, basically neutral, slightly bearish. I think the longer term outlook is what's going to keep me away from this one. I'm not going to be playing it necessarily on this earnings report, but if there is any kind of run up, I may play the short side. We'll see. I know that they were downgraded this week by Bank of America, Citigroup, JP Morgan, and Wells Fargo, and they're up 10% this week. So that's kind of funny. They're trading around $100. If they have a good report, and or if they have a so-so report and it bounces, I'd be definitely be willing to maybe take a short position here because, again, a lot of the macro stuff does not seem to be in their favor, and they're doing worse than any of their, I'll use air quotes, competitors. It's tough, like you said, to compare them to anybody. But that's kind of my outlook on Best Buy: semi-neutral to bearish short term, and then leaning a little bit more bearish longer term.
Tom White, I just bought 2 new TVs about 3 months ago. Went in Best Buy, had them loaded in the car right there. It worked really well. Landon, a quarter ago, they got creamed on earnings because they beat on EPS, but they guided flat for the coming quarter. The stock sold off significantly, as you can see. And now it's down. I mean, their year-over-year earnings, they're expected to be about $10 a share and about $52 billion in revenue for the year. So this company is, having a relatively good year in terms of the money they're making, but those flat guidance. Here's my question, Landon. This company, like a lot of retailers, right? You're seeing kind of a resurgence in retail this quarter after a couple quarters of lagging and expectations and guidance that was flat. Landon, this company has a 9 PE. So it's not like it's real expensive in terms of valuation on a price earnings ratio. So could this be setting up for some type of a recovery? Because you're right, people are downgrading this and the stock is rallying, Landon.
Right, I know, I love that. And you're right, 9 PE, that's extremely low. If you're talking about value play, I think that obviously you get down to that low on a company that's cranking out cash like you talked about is definitely an attractive position. What I'm saying is that based on what we've seen, I'm trying to predict what may surprise investors, and the data that we're seeing with happiness and purchase intent being a little bit lower than competitors and being a little bit weak right now, the out of stock mentions being so high, a lot of frustration with the company. I would say that would make me think maybe the investors will be more likely to be surprised to the negative side than the positive side. If that happens and the stock shrugs it off, then everything's priced in, and now you're talking about a 9 PE with a very healthy company, and that changes everything, right? So
sure.
I'm really looking forward to seeing how investors take this report, seeing if LikeFolio's got the data correct, and if so, like I said, if they shrug it off and it stays around 100 or so, it could be, a really good value from here. One thing that I am concerned with, I mentioned the out of stock mentions being 45% higher than 2019. We got to remember what happened to Roku not too long ago when they had they were basically punished because of smart TV production. Now, obviously, savvy investors are going to make that connection. If smart TV production is down and it's affecting Roku, it's going to affect Best Buy too. So we'll see how much that's priced in. The final thing that I'm really looking forward to on this, it's a really low sample size because it's early, but I want to see what kind of membership numbers they're getting on their Total Tech membership, which is a $200 a year service that gets you better pricing, free delivery, and some tech service. If that is going well, that's a very attractive thing for investors because you can count on that revenue coming in year after year. Costco does it, Amazon does it. These recurring memberships are great, not only for the money that they bring in, but because it's very sticky. It keeps the customer coming back. So I think that is probably the most underrated thing to look at. You got to be looking at the Total Tech memberships. Again, our data on it is very, very low sample size, so we can't really give a prediction on that. But I do think that's where investor eyes should be going.
Yeah, you have a small sample size on that, and that was you kind of stole my thunder there, Landon. Thanks for that. On the Total Tech side, because as of November 1st, of just a month after they released it, they had 3 million members there at $200 a year. And, this basically gives you a 24-month guarantee, the stuff that you shouldn't buy at the counter when you're checking out, right? But at the same time, maybe ramping up into the holiday season. Do you have any sort of data on that Total Tech where you're seeing some positive mentions on it?
Yeah, it is. But again, the sample size is so low. I mean, if I had to make a call on it, I'd say it's doing well, which gives me a little bit, that kind of tempers my bearish sentiment a little bit. But it's so low on the sample size that we can't really make a strong prediction on it.
All right, great stuff. As always, bringing the data for us, slightly negative -6 score from LikeFolio. All right, Landon, have a great day.
All right, thanks, guys. Take care.
All right, that's Landon Swan, the co-founder of LikeFolio.com. Kevin,